XRP rebounds sharply after 41% flash crash. Reclaims $2.47 support. The session's $1.14 range, from $2.77 down to $1.64, was one of the widest in XRP's 2025 trading history, driven by macro-led deleveraging and heavy futures liquidations across major venues. XRP clawed back losses in Friday's chaotic trade, rebounding from a 41% collapse to close above $2.47 as institutional bids rebuilt following panic liquidations. The session's $1.14 range, from $2.77 down to $1.64, was one of the widest in XRP's 2025 trading history, driven by macro-led deleveraging and heavy futures liquidations across major venues. What to know? XRP fell from $2.77 to $1.64 between October 10th, 1600 hours, October 11th, 1500 hours, marking a 41% intraday collapse before rebounding to $2.49. Over $150 million in XRP futures were liquidated as Trump's 100% tariff announcement triggered cross-asset risk aversion. Intraday volume topped 817 million, nearly triple recent daily averages, as volatility peaked at 41%. Institutional accumulation seen between $2.34 to $2.45 as large holders rebuilt exposure on the bounce. Key resistance remains $3.05 with upside. Projections toward $3.65 to $4 if recovery momentum sustains. News background. The sudden macro shock, new U.S.-China tariffs, triggered forced unwinds across risk assets. XRP briefly plunged to $1.64 before stabilizing as volume-weighted bids absorbed panic sales. Derivatives data confirmed capitulation. Open interest fell 6.3% overnight, while long liquidations outpaced shorts 15:1. Analysts framed the rebound as institutional recalibration, rather than retail-driven volatility, with treasuries adding spot exposure in the $2.40 zone amid ETF inflows and improving sentiment around Ripple's banking integrations. Price action summary. The steepest drawdown hit 19 to 2100 hours Universal Time Coordinated as XRP dropped $1.08 on 817 million volume. Capitulation candle of the week. Immediate rebound to $2.34 created new base. Price then climbed steadily to $2.49 by 15:00 UTC. Final hour, 14:58 to 15:57, saw a 3-cent band, $2.46 to $2.49, with volume of 2.2 million, evidence of consolidation, not exit flows. Market structure rebuilt with $2.47 to $2.48 as short-term support, confirming absorption of earlier volatility. Technical analysis. Support, $1.64 holds as capitulation low, $2.40 to $2.45 forms accumulation floor. Resistance, $3.05 remains breakout trigger, close above signals structural recovery. The volume, 817 million versus 30-day average is almost equal to 270 million, capitulation grade turnover. Pattern bullish recovery channel developing. Momentum indicators turning positive above $2.47. Trend RSI recovered from oversold. MACD histogram flips toward zero, showing early reversal bias. What traders are watching. To whether $2.47 zone holds as confirmed support through weekend Asia sessions. Continuation bids from institutional desks post-liquidation phase. ETF-related flow data following the 21 shares TDOG launch spillover. Technical break above $2.90 to $3 to re-enter long setups targeting $3.65 plus. Macro risk narrative. Follow through from tariff escalation and crypto correlation spikes.